So Asian markets were generally subdued. This is the number of people killed by the coronavirus now superseded the number of people killed by the severe acute respiratory syndrome 2 decades ago. However, Chinese markets managed to buck the trend as the government eased people's ability to get back to work. Japanese markets ended the day in negative territory, with the Nikkei share average closing down 0.6%. Hong Kong stocks also took a hit today, with the Hang Seng Index falling by the same margin. Chinese markets were buoyed by government support to get the economy moving. And those markets also had to digest inflation hitting an 8-year high on the back of the coronavirus and the tightness of supply it's created in some of its goods and services. Chinese consumer price inflation rose by 1.4% in January month on month, while producer price inflation rose a mere 0.1%. The Shanghai Composite Index ended the day 0.5% higher. Let's go to the United States now. Wall Street fell from record levels on Friday after a 4-day rally as investors digested the monthly U.S. jobs report and braced for the next coronavirus developments. But stocks still posted solid gains for the week. The Dow Jones Industrial Average fell 0.94%. The S&P 500 lost 0.54%, and the Nasdaq Composite dropped to 0.54%. Let's take a look at your European markets and more. Joining us from the Johannesburg Stock Exchange is Bright Khumalo from Vestec Asset Management. Very good afternoon, Bright. Last week, we saw record highs in some U.S. major indices, some Chinese markets up as well. Are the coronavirus, those initial fears, no longer inflicting as much damage as they were before?
Afternoon, Zinga. It's lovely to be here. I think, the vaccine, the coming out of the vaccine of the coronavirus has been great news to, prop up markets, especially the last week we've seen, like you're saying, record highs in the US markets and a big bounce back in Asian markets. The only thing that was, a bit of a pebble in the shoe, I guess, is the Friday's jobs numbers. But in terms of, if you look at the overall US markets, since we're just coming out of earnings seasons, the earnings were looking very solid for most of those companies that were seen as, sort of overvalued, and everyone was asking themselves, I guess investors, whether they could keep on this kind of growth, to sustain the valuations at that point. And so far so good on that front. So I guess shareholders for now, they're happy.
Okay, let's stay with the impact of that coronavirus. When it comes to commodities, we saw this morning Brent spot prices falling about 0.2%. That's said to be on the back of supply concerns and in part that virus.
Yes, you remember we still have supply constraints in Saudi Arabia, and obviously Russia now becoming another big issue coming from that side of things. So I guess, it kind of explains the volatility in the price of oil, and probably is still going to be very volatile going forward. But I still feel that there's excess supply in that market. But if it's owned by oligopolies and a union like that, it tends to benefit the suppliers more than the buyers or the users of the actual oil.
Mm-hmm. So we saw that emerging market currencies are not performing so well. The emerging market currency index is said to be lower by about 1.6% since mid-January. What's the effect of this and why?
Look, I mean, there's a lot of moving parts in this, and one of them is the fact that, Trump is still doing good in the US in terms of, the early stage.
Yeah, you have to qualify that.
Rallies. The rallies, in terms of leading up to the elections, he hasn't really had that much competition, and obviously the dollar is strengthening against that, and the fact that on Friday we saw those numbers, like I said, the jobs numbers coming out, also giving some strength to the dollar. This is a case where good news is bad news, and that's where we are, right? We find ourselves right now in terms of the currency market. But unfortunately, the triple R's, in terms of currencies, they're not doing well, including the rand, the ruble, the rupee, and those kind of currencies not doing well. And it kind of makes sense. When you have this kind of big news, it's just easier for traders to actually short emerging market currencies if they kind of have a good feel of what the number is going to be. And in this time around, they were right.
Okay, let's come to the State of the Nation address, quite anticipated in South Africa. Some political parties already speaking about how they'll behave there and how they'll try and stop that from happening. How closely do the markets watch what's going to be said at SONA, if at all?
Look, I would have usually said no, the market doesn't really care much. Most of it is priced in, blah, blah, blah. But actually, there's a lot of structural issues in South Africa. The obvious one being Eskom and the SOEs. But the bigger issue now is the fact that, COSATU wants to take, pensioners' monies, government pensioners' monies, and put it into Eskom and try to save these SOEs that we've seen that are not being run up to par with the equivalent in other countries in the rest of the world. But it doesn't make any sense to give them this money, but it's an argument for another day. But definitely want to see in the budget, what's going to happen, how the money is going to be allocated, and obviously markets are going to react according to whether, the government is not only just saying the right story, but is actually put actions in place to actually do to get us closer to our, short-term and medium goals as a country.
One of the complaints by big companies and possible investors when it comes to South Africa, one is our power supply challenges, and two, this phrase, policy uncertainty. Someone who's feeling both of those things is Goldfields, reportedly still waiting for ministerial approval and a license from the energy regulator to build a large generating facility. That's just an example of the issues that are there. But I thought that Mineral Resources Minister Gwede Mantashe sorted this out last week and said everyone can just generate power.
Yeah, I mean, it's easier said than done, right? He said one thing. This is a perfect example of what I was saying previously. The minister says we're good to go, 2 thumbs up, and the actual process is not there to make it possible for people who are ready to take upon that challenge to actually produce their own power, to actually do it. And they can't, like you're saying, they can't get licenses as fast enough as they should, and they can't just go through normal channels to actually get that kind of work done. This is a perfect example of, putting down a policy, saying, oh, this is possible, and potentially, it'll be good for corporate South Africa, but in actual reality, in real life, it doesn't really happen. And this is why we're actually waiting for the SONA to see what they're saying is going to happen and what actually is happening are going to actually collide together and actually, move us forward, like I said, as a country.
Okay, and then finally, Brimstone share price down about 4.62% on the news of its acquisition of Obsidian Health. What's happening there?
Look, they've already held that company, Obsidian Health. They had a 25% stake. It's basically a sub-Saharan supplier of medical devices and capital equipment to private and public hospitals. And this makes sense. It's about 36.5 million rands to actually put back into the company, so they could, in exchange of 80% of the stake from 25%, they have now control, more voting power, and it kind of makes sense to go into the private space, I guess, because in that space, the valuations are more fair than what we're currently seeing in the markets. In terms of how the market reacted to it, Brimstone, it doesn't really have that much volumes in terms of trade, so it's hard to say actually how the market, received the news. So the 4.6% could just be, a small trade that has happened in that company. Yeah.
Bright Khumalo, an analyst from Vestac, joining us from our Johannesburg Stock Exchange studio. Thanks so much for your time on SABC News this afternoon. It's time for a short break. I'll have more business news for you after that. Do stay with us.